there and welcome to Moneycontrol. My name is Ashwin Mohan and you're watching a brand new edition of our ongoing live non-stop post-budget coverage. Over the course of the next 1 hour, we are going to take a deep dive into the impact of the interim budget 2024 on the investment climate in India and also Deal Street. I have a stellar panel with me today in our Mumbai studios as well as our Noida studios. Let's start off by introducing the private equity viewpoint, which is going to come in from Divya Sehgal, partner at homegrown private equity firm True North. We have the legal eagle over here, Shuva Mandal, partner at Anagram Partners.
Thank you.
And joining us also from our Noida studios, and this is the Big Four viewpoint coming in from Vivek Gupta, partner at KPMG. Gentlemen, thank you so much for taking out time and joining me on the show today.
Thank you.
This is an interim budget, so of course, one thing has to be clear, no big bang, earth-shattering announcements were expected, but nonetheless, there are a few indications of the strategy that the government has in mind, and there is a tone that has been set in place. So let's kickstart with one of the key announcements that has come in, and this one is something that is perhaps likely to put a smile on the faces of many of the pension funds and sovereign wealth funds, the likes of Temasek, CPPIB, and Ontario Teachers Pension Plan, the Canadian investors, right? Let's address that question with you, Divya. What the budget has done is that it has extended the tax benefits for these funds. Now, these tax benefits for investments in the infrastructure sector specifically, they're going to expire on 31st March 2024. The budget has now extended that by an additional year to next year. What do you think is the impact of this move? And how important is it? Because at the end of the day, tax swaps are always welcomed by PE funds, right?
Yeah, of course. And again, Ashwin, thank you for calling me. I think if you first, before I respond to the specific question, I mean, at least the big theme in the budget, to my mind, is stability and simplification.
That's right.
Right? And just continuing that theme, right, for some of these funds which have been investing in the infrastructure space, given that this is a vote on account for a certain period, right, it did make sense that their tax benefit should not fall in between the cracks. So I think a short-term decision of extending it by a year has been taken, which allows the government to take a longer-term decision when the main budget is presented in July. So sounds like a very sensible next step, and again provides a degree of stability, which is the large thesis in literally no other tax changes, right? Whether it's direct or indirect tax. So at least from that perspective, it's quite consistent.
Certainty is what investors want, right? Nothing unpopular, nothing too controversial.
Yes.
And I guess on that front, this budget has scored full marks. Shubha, why don't you weigh in your preliminary comments on this aspect, the tax breather of sorts that has been given to this pocket of investors, sovereign wealth funds as well as the pension funds. And as you're well aware, they are participating in several M&A scenarios in India.
Great. Thanks, Ashwin, for having me. And I think, what Divya mentioned is key, that this seems to be a window, a short-term window being given so that they can formulate a more long-term strategy in the more full-term budget that will be coming out post the elections. But I think the key point that all of us need to bear is that this is I would still use the word carefully, it's still a very narrow exemption. It's limited to the infrastructure space.
That's right.
So where does it really bring in amongst the more, the more populist investing companies? It's probably telecommunications, data centers, where some of these really come in. I think for the next round, the challenge will be how do you expand this? You've given this exemption to certain types of investors, the long-term pension, sovereign wealth, stable capital, with geopolitical angles, given they are a lot of them from sovereigns. I think the key issue will be, will you extend this to a broader set of investments? So I think that the jury is still out on that.
Right. Vivek, why don't you weigh in as well? I was speaking to one of your peers and he was telling me that this could also be a shot in the arm as far as the national monetization pipeline is concerned, and some experts believe that this move in terms of a tax breather could also lead to more investments or fresh bets in a few sectors like warehousing and data centers. What's your take, Vivek?
So I think Divya captured it beautifully. This is a budget that has indicated stability and simplification. I don't think as an interim budget we were expecting too much more. But what is critical to note is I read this interim budget statement as a statement from a very confident government, a government that's in command. Insofar as the specific pension fund, sovereign wealth fund exemption was concerned, actually the widespread expectation on the street was that the extension of the tax holiday will happen in the 23 budget. When it didn't happen in the 23 budget, knowing that 24 was always going to be uncertain because this was going to be a vote on account, it was always dicey in some respect as to whether it will happen or not. I think the government, by signaling an extension till 2025, has very elegantly filled the gap, allowing the main budget to take a call on what should happen on this going forward. My read is the fact that they've extended it till 2025 means that the government welcomes, respects this capital that is coming in, and therefore the government will look to do a larger scale extension when the budget finally happens in post-elections in July or August. So I view this as a very positive signal. I also view this as a in some ways a courageous signal, because in a vote on account, normally you would not expect any tax changes. So the fact that they've heard the investors means that the government has signaled that they welcome and respect capital. And in light of that, what you say about this category of investors becoming more involved with the Indian economy in terms of actions such as the National Monetization Program or investing in specified infrastructure sectors, certainly it gives them far more confidence. It was hugely uncertain whether this gap will be filled or not. We were talking about the fact that there will be 3 months or 4 months where there will be significant uncertainty. The fact that on Feb 1, even in a vote on account, the finance minister could stand up and extend it till 31st March 25 is hugely positive the way I look at it.
Vivek, very quick take on what are some of the sub-sectors in infra which you think would benefit in terms of M&A activity and further bets from these funds. Infra is a big broad umbrella, right? Can you tell us about some of the sub-sectors that could benefit from a deal point of view before I move on to Shuva and Divya?
No, sure. So look, in infra, I think last 3 years have been very active in infra deal making. A lot of these investors themselves, sovereign and wealth funds, sovereign and pension funds, have been supremely active in that space. In terms of the sub-sectors, the sectors that have been interesting have been renewable energy. A lot of investments have happened in the renewable energy sector, roads, ports, even conventional power. I think a bunch of investments have happened in the whole infrastructure space as a whole. The thrust that this government has is very clearly to say, fix the infrastructure, make that pool of capital super strong, and that becomes then the bedrock for further development and prosperity to happen around the infrastructure space. You create roads, you virtually create new cities, you create a whole prosperous cycle, you create employment. So infrastructure by nature is long-term stable capital with a lot of follow-on impact. Which is why I think the government has propelled all these subsectors, and this category of investors has stood up and put its hands up in terms of investing in the country.
Sure, Vivek, hold on to your thoughts. Divya, would you like to add to what Vivek was saying?
Yeah, I would. The one area that I would say there could be some further doubling down is obviously the entire data center space.
Right.
The government is quite focused on it. I think our data needs are shooting through the roof. And to that extent, this actually amplifies the ability for a lot of these funds to continue investing in that space. The one other element that has been raised in the budget, which I think is a very pressing need, a space that we've looked at very carefully, is the post-harvest agri space, specifically the agri warehousing. So if you go around the country, the quality of warehouses where a lot of the agri goods are stored, both wet and dry, they could be far better and far more in terms of numbers. And those cold chains dry chains are a pressing need as we move forward. So I think this could potentially do that. I think a lot of warehousing investment has come in the non-agri space. In the agri space, it's an area where post-harvest agri where there is further requirement for this.
Right. So that's an area we'll keep a lookout for. Shuva, sometime back, and this is during the G20, right, in New Delhi, that's where there was a mention of the ambitious India, Middle East, Europe economic corridor, right? And that corridor found mention in FM Nirmala Sitharaman's budget speech today, where she said the corridor is going to be a game changer for India, clearly meaning that they want to back this project seriously. You work with a lot of funds, right? This corridor, of course, includes UAE, Saudi Arabia. Give us a sense of the kind of involvement or participation that you have seen from the Middle East bloc when it comes to M&A activity in India, and what does this corridor mean if you were in their shoes?
Thanks. I think, Ashwin, on a lighter note, it was not just the G20 announcement. If you just go back, even President Biden made a remark that one of the root causes of the conflict in Gaza happened to be this particular G20 announcement. He does allude to that in one of his statements. So on a more, if you really see, and I think the second important fact that has happened is what has happened today. India has ratified, or the cabinet has approved the bilateral treaty with UAE. So these are all building blocks. So I think if you see what some of the investors tell us and what is the long-term plan, I think the kind of infrastructure growth that's happening in the Middle East, you've got NEOM, they've formed their own funds, it's a whole city being developed there. You've got Abu Dhabi, you've got Dubai.
So Mubadala.
Yes, amongst all the investors.
Yes.
So there's a massive corridor, and it's also got to do with geopolitics that's evolving. So if you ask me, the interest from Middle East is huge. And let me even go to the extent of saying, even some of the funds that you would otherwise characterize as European or North American or larger Asian pools of capital are significantly back-ended by Middle East funds. So if you really take all that coming together, it would probably be, certainly in the world's top 5 centers where capital is focused on.
So all these moves augur well as far as Gulf capital flows into India is concerned across sectors.
Yes.
So potentially, right, there is capital and oil, right, which is something that they are rich on.
Yeah.
There is talent, services, agri products, right, which you would argue we are 1/6 of humanity. We are rich on. So it's sort of a little bit of a marriage made in heaven, and to the extent people, talent can move, and obviously UAE is a great sort of entry point for the larger Middle East for India, and it's been a very good partner for a very long period of time. So that matters. I can tell you a lot of private equity funds, have historically and in the future will lean on Middle East capital to be invested via them into India. It's a fairly rich source of mature capital that does comes with a long-term point of view.
Right. Fair enough.
And just to add to what Divya was saying, even the green, if you may put the green capital source. So look what's happening in India. It's going to be the only country in the world where conventional power will become half because without growth, because the replacement power that's coming up will be in renewables, and that will make conventional power half, unlike other countries where they are going to be faced with shutdowns to grow renewable. So we are going to continue with our conventional power, but renewables will make conventional power 50%.
Right, fair enough, fair point.
And for that, you're seeing, is what Vivek mentioned, you're seeing a lot of the Middle East corridor capital coming in, because that's an easy picking in the green movement that they have to participate.
So clearly right tone set by the government. I'll come back to you, Shuva, because this is a topic on which I know you have views. Vivek, another aspect which is being welcomed by the investor community is the fact that the FM spoke about how India is negotiating bilateral investment treaties with several foreign partners, and the whole strategy seems to be that all this negotiation is being done in the spirit of FDI, which is first develop India, right? Clearly that means that they're looking at reciprocal arrangements. What do you make of the fact that this found space in the budget speech? Because at the end of the day, if you strike these bilateral treaties, and we have a few with many countries, do you think this perhaps opens the gate for a few more countries to be part of such pacts with India? What does this sort of mean as far as progress is concerned on fair and equitable treatment as far as foreign investors vis-a-vis domestic investors is concerned? Your thoughts on this statement by the FM, Vivek?
So Ashwin, a very good pick. I think the FM, by indicating this, has demonstrated one core tenet on which this government has worked. So if we sort of rewind back, last 10 years has been a period where I think this government has very clearly said, we welcome capital. We welcome capital in most areas. So now today, most areas in India, except for really politically sensitive ones, are open for foreign investment fully. The other thing this government has said very clearly is, we will try and give you certainty. So no retrospective changes. If you earn money in India, and of course there have been tax litigations, but if you earn money in India, the government's view is pay 10% tax and on your gains, which is a very reasonable tax rate, and be done with it. So the government has said, come into India, invest in India, for India, as you say, FDI, for India, and earn your profits, pay your taxes, and be happy. Bilateral investment treaties is a part of that entire system of this government to say we are capital focused. The fact that we will offer you a fair and equitable ground to invest in India, as Divya mentioned, we have 1/6 of humanity, so a large consuming class. We welcome you to invest in India and partake in its growth story. So as the world slows down, from a macro perspective, the way to look at it is, as the world slows down, but India still has power to go on for the next 20 years, come in, invest your capital fairly and equitably in this country, and make your returns fairly and equitably. I think that's been the mantra of this government over the last 10 years. And the fact that the FM mentioned this in her speech indicates that they will continue to go down that path. Which is why I said this sounds very much like a statement made by a government which is fully in command, by a dispensation which believes it's firmly and surely headed for a return for a third term.
Right, we'll have to wait and watch for that. But point taken, Vivek. Shuva, first develop India, the new FDI, so to say. What does the FM mean by this in terms of striking bilateral, treaties with other countries, and also does this also offer an opportunity perhaps to address areas and aspects like arbitration, which have been tricky? We know of a few controversial cases in the past. Your thoughts?
So I think I'm at a slight variance from how Vivek has put it on this. I think, look, in the last 6 years, India has cancelled 77 BITs.
Wow.
Okay. So approximately it's around 70 to 77 BITs.
Big number nonetheless.
Yes. So why? Because there was a view in the government that these were not correctly negotiated. But be that as it may. At the same time, there have been a few litigations which partly were honored, partly were not honored, were challenged. So there was a lot of controversy in this space. I think the statement was made in the budget more to give out a signal that there was a lot of tonality in the market that India wants to do away with BITs. I think the message is coming out, at least was being indicated,
we're sticking to it.
That we are sticking to it, we're renegotiating it. Right? And this is becoming important because, whether we like it or not, we're not the only economy in the world. I mean, we like to think, we are the center of the world, but look, there are competitive economies and various countries go through different growth phases. Japan is a relative hotspot today, which it wasn't even 2 years ago. So amidst all this, we have to be a little mindful of, if you really want to attract FDI, if that is the discussion you really want to have, you have to be comparative in many ways. And we can't forget, as much as we would like to shed, we still carry an emerging economy tag, as much as we would like to shed it. So given all these dynamics, I think it was very important for the government to indicate to the world that they are renegotiating.
They are serious about this mechanism.
But again, there's a lot to be, when you say first develop India, again, with due respect, it's a bit partisan, the statement, it is a treaty, it requires a two-way conversation. And, global investors are not in the charity business. So let's put it straight out there. It has to be negotiated like any global equity principle has to be, in terms of most favored nation clauses, in terms of what is a look-through investment, and there are several such litigations pending today. So very sophisticated investors will tell you today they're pretty scarred on this approach.
So what do you think the big signal is from the FM to the rest of the world?
That we haven't forgotten BITs. We will come back with a new version.
Right. Divya, you want to come in over here and add to what Shuva was saying?
If you look at it between two countries, right, what are the big things? There is trade, there is capital, and there is people exchange. I think a lot of these, at least the treaties, investment treaties that are there are already there, and the bilateral ones that are being built are built around trade. And I think India appropriately leans in that the people part of it, right, say the visa delays and so on and so forth, needs to be a key component of what gets negotiated between us, because that is a critical part of what India offers. So to that extent, yes, and India has sort of walked away from the multilateral ones to bilateral ones, and on bilateral it is saying that we are in business and we are happy to work. There is a little bit of a statement that we would like to do it on our terms. Of course.
We'll negotiate, but we'll negotiate in a tough manner. Right. All right. Vivek, now let's shift focus to the government's thrust behind the entire EV ecosystem, right? And that also found space in the FM's budget speech today, where she said that the government is looking to expand and strengthen the entire EV ecosystem by supporting the manufacturing and and the charging of infrastructure, EV infrastructure, because that's core, right, to the entire ecosystem. And they're also batting for greater adoption of e-buses for public transport systems. So sentimentally and directionally, they clearly are backing this space. They want this space to grow. Now, as you would be aware, and some of the other panelists here also would be aware, fundraising in the EV space has been rather tough in the last 6 to 12 months, right? There have been a few fundraisers that have been put on the back burner. They have been deferred due to certain changes on the policy front. But with this renewed focus and intent that has been displayed in the budget, do you perhaps think that this sort of augurs well for a few fresh stake sales in the EV space that perhaps may not be really active right now but may kick off soon?
Look, directionally, I think it is every government's intent to further green growth. EV is a significant component of that entire program. Till now, I think the fact that EV deals, there have been some EV deals, of course, but that EV deals have been fewer is a function of the fact that the scale in the industry for individual players has been limited to a few. Each time the government indicates more commitment towards a sector, the signal it sends to me is the government is saying more and more scaled players will come in the sector, either that or the existing players will become more scaled, and the moment they become more scaled, Divya will tell you that instantly they're more investable, instantly as they attract more capital, they will then be able to reap the follow-on benefits of even more capital, even more growth, and so on and so forth. So the prosperous cycle starts. So I don't know whether just this announcement in isolation will cause more deals to happen in 2024 in the short term.
Sure.
But in the long term, as we build scale in the sector, will there be investment and will there be global capital allocated to the sector in India? I think the answer is yes. Are there investors who are looking to invest their pools of capital into the space? The answer is yes. Are they looking for scaled investable targets? The answer to that is yes too. And I think moves like this develop that scale and develop those investable targets.
Fair enough. Right. Divya, there have been a few investors like Vivek was pointing out that have struck deals in the EV space, notably TPG with Tata Motors, BII, Mahindra and Mahindra, right? A few more are in the works. True North doesn't have exposure to this space, right? What's your view on this on this space? It's a niche space. It's an upcoming space.
Yes.
And your key takeaway on the FM's push behind this segment.
Yes. So I think the way we would look at this is obviously market attractiveness and the stage of the development of that market. Without doubt, the future is in the direction of EVs, sort of green growth, the vocabulary that Vivek used. In that context, it's obviously an emerging area, and it's something that people like us would like to invest. I think the key yardstick that some of us would apply, Ashwin, is that is the industry in the venture stage, or has the industry matured where it is now approaching a private equity stage? Because again, within our industry, there are shades of capital, right? There is venture, there is growth, and then there is more mature growth or a buyout.
So
right?
which stage do you think the Indian EV segment is right now?
I think globally, different countries are in different stages. But, we would call, what's the yardstick? Let me say, what's the threshold at which it goes from venture to private equity? One is the industry size. And the second is unit economics being established. So industry size is that large number of people are now adopting it, and it's become a double-digit percentage of the overall industry. Say two-wheelers, right? Is it now 15%, of the industry? And second, are the unit economics sort of working out minus the government incentives at some level? Because in the long term, one has to assume that any business model has to be able to stand without the government incentives, in a manner of speaking. So I think those are the two things. So right now, obviously, different parts of the EV industry, you could argue, are in different stages, but they are more venture-ish than private equity-ish. Now, obviously, there are pools of capital globally, right, which have been raised to invest in these segments, and that is their investment thesis. So many of them, therefore, have focused on some of this, and they've invested. While someone like us, for example, would struggle today because we would just find that the stage of that industry yet is more on the venture side than where we would like it to be. Of course, people like us are tracking it. We would like to come into it before it becomes so mature that it gets ready to get listed. Right? Ola Electric is now jumping into listing. So to some extent, they've jumped forward the entire private equity stage of life, and so but they are not the only player. There'll be a whole ecosystem that would get built out, Ashwin, and we are tracking therefore different players in that ecosystem.
Shuva, as a corporate M&A lawyer, how excited are some of your clients about this space? And let me stretch this, not only EV, the entire sustainable investment space. What are you what kind of response are you getting from them? Is it actually as active as it is globally? Or is it just a buzzword which is yet to catch up seriously?
Look, I wouldn't say it's a buzzword. I wouldn't call it's active. I'll just put it this way. Look, I'm not qualified to get too much into the dynamics of the space, but what we see is a lot of the investments are quasi-equity. They are growth, but there are also assurances around some of these equities. So I think even investors are not taking in a full bet yet. It's a very broad statement I'm making, but that is how I think some of them look at this sector.
Right. Vivek, you're the corporate tax expert on the show. If you look at the interim budget, no surprise, no unpopular moves, nothing controversial as far as the tax rates are concerned, both on direct taxes as well as indirect taxes. So status quo over there, and many would believe that perhaps status quo means something positive because it's not been tinkered with. Your take on this strategy by the government, are they warming up for something more in the fuller budget later this year? What do you think?
No, so two things. One, this was an interim vote on account. We did not expect any major change in the tax rates. By convention, the government would not change tax rates in an interim budget. So to that extent, not a surprise.
Okay.
The one thing that I do note though is that the finance minister noted the fact that taxpayers in a sense have become more compliant, have rewarded the government with higher revenue receipts. She therefore spoke about simplicity. She spoke about the measures that the government itself has taken. She spoke about the exemption limits going up. She spoke about the fact that the number of days taken to process an income tax return has come down, and so on and so forth. So there was this little bit of, let's say, positive commentary on the fact that the government has done stuff for the taxpayers, and the taxpayers have equally, if I may use the word, rewarded the government by being more compliant, and so on and so forth. I do think, I would like to believe actually, I don't know whether I do think or not, I would like to believe that this indicates that if this government were to come back, we would see stability and continuity insofar as tax rates are concerned. I think our tax to GDP ratios, I think our fiscal deficits, etc., have shown that there is no dramatic or urgent need to tinker with rates in terms of increasing them. I think the government has also said over the last 7-8 years that they will follow a stable tax policy. So I do not expect any large scale negative surprises on this count, even in the full budget.
Right. You know, since we're on the topic of taxes, Vivek, very quickly, what tax move would you perhaps think is corporate India or the investor community most looking forward to? You know, we have a budget coming, a fuller budget coming in later this year. What would you pin that on? I want you to stick your neck out in terms of, you know, the corporate tax ecosystem. What's that one big change that investors are really looking forward to and are hoping that the FM will deliver on that front?
Look, there's always a slew of tax demands that the investors have, right? Or corporates have.
Yeah.
I don't want to really view this from that prism. I think directionally the government is headed down the right track from a tax rate standpoint, from a GST standpoint. I think there's some rationalization of GST rates that will happen, and that will be welcome. That's already sort of in some ways factored in by the industry. The one thing that I think investors and corporates really want is fair and equitable treatment and certainty in the tax policy. I think there are still 2 or 3 areas within our tax code where there is discretion in terms of how it's applied, where one could argue that is it all completely fair to an investor, completely fair to a corporate. These are sections which are, let's say, sections which deem incomes in certain situations, sections which create artificial income connotations, which are meant for specified abusive use, but which then in their sweep get applied in a wider way to corporates. I think the one consistent expectation as we talk to investors, as we talk to corporates, is this government should try and weed out those sections, or at least provide mitigants in those sections,
right,
such that we align ourselves with how globally developed economies tax those kind of abuses. So I would therefore say some bit of rationalization, some bit of simplification and fairness, but I think directionally I don't see much demand from a tax rate or any fundamental perspective from either investors or corporates on the tax side.
Right. Divya, any sort of pending demand from on the tax front from the PE or VC community? Something that perhaps you think the FM could address in the next budget, not this one, but something that's sort of burning, which you want to highlight here?
Yeah, no, the point that I would make, just taking a slightly long view, and I'll come to the, what's the potential, some of the changes that we could think about, right? I mean, I think there are 5 things that the government has sort of managed very well over the past 10 years. Infrastructure, physical and digital, stability. And we spoke about stability, but if you look at interest rates, right? Volatility in India versus volatility globally. We've been a haven of stability. Exchange rate, right? Even fiscal consolidation that is now happening, which is behind the tax rates, right? Each one of them denotes stability. Then we spoke about simplification as a theme, right? We've spoken about income tax simplification. We've spoken about GST. We've spoken about what happens in our income tax, officer interactions, customers. A lot of changes by SEBI, by RBI, IRDA that are customer positive. So that's a very big theme in my mind for the simplification side. The financial sector cleanup, whether it's the bankruptcy law, whether it's the balance sheet cleanup. I think today the entire financial sector is in a very, very different place. And then last but not the least, I think how we are viewed globally. India is no longer punching below its weight, right? So now if you were to extend this, it's actually a lot which is very similar, if I may say, that at least would be our request. So one of the first things that my industry would argue, today we are investing nearly entirely equity. Is there a possibility that we can also get some degree of leverage, which goes along with actually debt capital market reform, ability to get some leverage? Vivek spoke about the deemed income concept more sharply. I think the whole concept of FMV, while defined in many places, still lends to a certain degree of grayness. To the extent that could be simplified. I think in the last 5 to 8 years, again, thanks to the government effort, the domestic fundraise market has really come up for alternative sources. Now, how can we find a way, because that's increased and sort of stabilized to a certain level, to take it to the next stage is a potentially third and large segment that I would argue that in our industry would love. Because if you now look at public markets, we were just discussing offline, right? 10 years ago, most of the money coming in used to be FII. And today it's the domestic mutual funds and institutions,
yes,
right? Which are as or more important. Similarly, while we welcome and love our foreign money which is coming in, and it's $50 billion a year now of VC and PE investment into India, but likewise being able to raise long-term capital from India also to invest, which is something which was nearly zero 10 years ago, but is now standing on its own feet. So how to get that to the next horizon?
Right. No, that's quite a long list, and I hope the finance industry is tuning in. Shuva, let's speak about some aspects on which the interim budget was silent on. Maybe perhaps we can expect the second budget later in the year to address some of these aspects. Last year there was a roadmap that was expected that didn't really sort of come out of the budget. And that is the eagerly awaited roadmap for direct overseas listings of Indian companies. Right now, of course, we have the ADR and the GDR route. The intention has been made clear by the FM in announcements earlier. There was also an amendment to the Companies Act late last year, right, which spoke about the fact that certain select companies in certain specified jurisdictions could operate. Right. Then, of course, very recently, we had the floodgates opening for Indian companies to list in gift city exchanges, right? Now, that is being seen as a precursor to perhaps eventually coming out with that detailed framework. So the detailed framework is what people are looking for. What are the kind of shares that can be listed? What are these jurisdictions wherein we can sort of look at, right? Your take on the overseas direct listing aspect and the potential it has to find mention later in the year.
Sure. Thank you. Look, I'll put it a little differently. It's much ado about nothing. Direct listing for Indian companies in offshore jurisdictions, keep aside IFSC and a few regulated jurisdictions, is actually changing the very foundation of FEMA, the foreign exchange law in India. Because that means there's full capital convertibility. So that's a decision which the Reserve Bank has to take,
yes,
the Finance Ministry has to take. So that has to happen first.
Yeah.
We are still capital controlled. That's first. Second, for direct listings, we are talking direct listings in a few mature jurisdictions without getting the technical jargon on whether it's FATF, what type of jurisdictions, mature stock exchanges.
Yes, NASDAQ, yeah.
The subset of Indian corporations that will actually hit those markets in the foreseeable future, I would say, look, I don't have a vision more than 3-4 years, is a very small subset of less than 10 companies, perhaps.
That's agreed. And those are the tech startups, right? Some companies like
may
SaaS
not be
companies.
tech,
Right.
tech startup.
Mostly tech companies.
No, it could be the It could be the EV subsidiary of a major corporation.
Whatever helps the company find a better valuation abroad, they'll be tempted, right?
That's right. No,
Yeah.
Actually, it's a function of two things. It's a function of acceptability of some of the companies also in global markets. It's not that every Indian company has raised a ADR, GDR program.
Yeah.
Only few can.
Yeah.
In a meaningful way. So I think there are many angles to this.
I'm just speaking about it from an option point of view.
Yes.
Not that the Indian capital markets are not deep enough to absorb them.
Exactly.
They are.
Exactly.
I'm just speaking about from an alternate point of view. Yeah.
Correct.
Yeah.
So I think it will open up.
Yeah.
But it will be in a very controlled manner. And I think what the challenge will then lie is what does it actually give you? Ultimately, people are listing for valuations.
Valuation, a diversified global pool of investors,
Well, the global
probably
pool
better
exists-
corporate
Well,
governance.
which you could
norms.
argue, I mean, which
Exists
at
today.
some level
Yeah.
you could argue.
exists today in India also.
Okay.
So I think, yes, I mean, these are all stories and these are all news. But what does it really offer? If you really go through down that thing, I think it will finally rest down a path where, yes, there will be interest. There will be interest for some companies, and we're talking about the large conglomerates who would want to list some of their entities in global jurisdictions, where there's not enough appreciation in Indian markets.
Yeah.
But it is not meant for the wider Indian listed companies.
Agreed. It's a niche universe. Agreed. That's absolutely.
Either niche or the super large. The two arguments, right, for global listing is that the investors, investing in the Indian capital market may or may not understand our business model.
Yeah.
That's right.
That's argument one, which to some extent, given what's happened, like the Indian primary markets have been open for listing while globally they've been closed,
Correct.
Sort of goes against that logic partly. And I think the Indian capital markets are also maturing.
Correct.
The second argument is that now if a large corporation like Reliance Jio was to think of listing and the amount of money that would come in, right, that they would need for a 25% listing, how would, the Indian capital markets manage it? Now, obviously, LIC sort of found a way to list and there is a pathway. So there is an argument for the very large corporations and the depth of the Indian capital market. I think that's also changing. So I think these are the two sort of different reasons at different ends. One for consumer internet businesses and second for some of the very large corporations.
And it also depends perhaps on familiarity, right? If your products are familiar overseas as compared to India, I mean, it's all about recall value as well, right?
Yes.
I mean,
Yes,
you don't
but
want to list in a country
but in India
where the
today,
people don't know you. Yeah.
But in India today, other than the IT services company, which
Yeah.
are predominantly global market oriented,
True.
we are a domestic economy.
Fair enough. No, absolutely. There's no doubt about that.
We don't have global corporations in that sense emerging
true.
out of India.
That's true. That's true. You mentioned RBI, also SEBI and Income Tax Department. Perhaps
course.
there will have to be coordination between these.
Look, they have a
agencies as well.
tweaks, but the fundamental shift is with the RBI and FEMA.
That's a
the
fair-
rest is tweaks.
All right, Vivek, very quickly, Shuva's point on the RBI angle.
So look, I think I largely agree with what Divya observed in terms of commercially, where does it make sense to do overseas listing?
Yeah.
Much has happened with the government over the last 2-3 years. Ever since in the COVID May press conference, the finance minister made a remark around overseas listing. I think actually the notification that came out last week, 24 January, which talked about overseas listing for IFSCs, effectively, to me at least, makes it clear that the proponents of those who say Indian domestic companies must largely list in India have won. Even though the notification talks about international stock exchanges and allows the government to notify some of the developed stock exchanges at a later point in time, I do think that directionally the government is headed down the track of saying we must add to depth on our exchanges. Of course, they want to push IFSC, and to that extent, they've brought in the overseas listing norms in the notification last week.
Yes.
But fundamentally, the government's direction seems to be we want to push in depth in our local exchanges, and therefore, to Divya's point, of the two of the companies at two ends of the spectrum, either the niche ones who are more appreciated by the global markets, or the truly large ones. I think the government view is for the truly large ones, just like LIC, the large corporates should also find a way to entice the necessary investor pool to come in and take a stake of 25% dilution in a very large economy. They'll be happy to consider 10% dilution and so on and so forth. But I think the government's current thinking to me indicates, and I know I'm sticking my neck out a little bit, but my read of the situation is the government wants to add more depth to the domestic stock exchanges, and therefore while there have been many conversations with the government over the last 3 years on overseas listing, somewhere the government has steadfastly continued to reserve its judgment in a manner of speaking on this matter, other than the notification that we saw on the IFSC overseas listing a week ago. Of course, the Companies Act has been tweaked to the point, Ashwin, that you make on SEBI, tax laws, corporate law, and FEMA to come in. So the company law has been tweaked to allow this to conceivably happen. But I do not think that in the short term, at least, Indian companies will have access to direct overseas listing.
Right? Who knows?
That's my take. I know I'm making a provocative statement, but that's the way I read the situation.
No, well, we'll have to wait and watch to see when that detailed framework actually comes out. So the ball is clearly in the court of the government. Shuva, you want to add something?
Yes,
please go ahead.
Not on this question issue. I want to go to the previous issue, and I think there's a very sensitive point which the government needs to take notice of. Is the reverse discrimination that's taking place in India. I think we live in the M&A economy in India. There's an anti-India discrimination. It's to the point which was being made here by Divya. So if you take large ticket M&A in India, the fact that we still live, we call ourselves developed, we call ourselves growing, and give us all the accolades, we still don't allow financing for acquisitions. You had one large cement company that went for sale. It was for a reason that nobody in India could buy it with the speed that it merited because of the lack of credit, which otherwise global investors could have access to. You had a large pharmaceutical asset which was up for sale, which again was not capable of being financed in the Indian market. So as much as we would like to believe, we still are handicapped on some of these very basic issues, which otherwise we don't see. Again, to the point Divya raised, on one hand, we want a growing funds industry. We are complementing that we have a very active IPO domestic market coming up, but we have a sense of regulation on the whole alternative asset space, which in some sense can be stifling when compared to the global atmosphere. So what you have before you is in some sense, in the name of regulation, discrimination. So you're giving actually comparative advantage to foreign players over your own very domestic sources of capital.
Yeah, recently there was an RBI circular on AIFs, right? That's sort of led to a divided street, but that's of course something that can be discussed in another forum. But fair point, Shuva, on the financing bit, those are aspects that perhaps the government needs to seriously look at if the big ticket deals that you were talking about do actually need to fructify. Let's quickly move on to a few other aspects before we wrap up our discussion, gentlemen. And this is one on disinvestments, right? So, Divya, this one's for you. So, the disinvestment target for FY25 has been set at around 50,000 crore rupees. The FY24 disinvestment target has been cut to 30,000 crore rupees from the earlier 51,000 crore rupees. As of date, the government has managed to garner around 12,500 crore rupees in the financial year 2024. What do you think it says about the pace at which the government is moving, right? There are big ticket disinvestments like IDBI Bank, Concor, Shipping Corporation. Perhaps they're not moving at the pace at which the government wants. So on that front also disinvestment, the budget speech at least was silent. We don't know what will come later in the year. Your take?
So I think firstly, disinvestment is not an end to itself, right? It's sort of, at least the way I view it, it's a means to an end, right? So therefore, the question that I'm sure that the government has asked itself, which are the areas where it wants to stay in business and which are the areas where it wants to reduce its footprint in business or does not need to be. And then there is a roadmap, right? So from where you want to get to where you are, there's a roadmap, right? And remember, there's a very important second element, which is not necessarily in the control of the government, which is an externality, which is demand for that asset, right? Demand for the tacit and from the investor universe.
Yeah, you also have to
of
time the
what's
market, yeah.
Right? So from the investor universe, what is it that they would be looking for? And in the mix of all of this is obviously, to some extent, the politics around it, right? So I think where one lands is one, the roadmap of the government, the external market, and the politics around it. And I think that sort of is these three sort of circles somewhere overlap to lead to outcomes. So I don't want to read too much into what was the last year number versus the next year number. I think there are some segments, say for example, I'm going to say this, you could make an argument that do we need 4 government-owned insurance companies in the insurance space? Right now, should we consolidate? It's been a topic of conversation. At some point, some decision will be taken. The government did take that decision from a bank's perspective and said, we want to consolidate, right? The banks so we'll have fewer, larger organizations, and that has gone fine. Now, that could be a roadmap that the government follows on the insurance side. The government then could selectively think about disinvestment. So I can't obviously speak on their behalf. But the way I see this, I think here it's very tough to see what's happening in the short term. True. Really, there are these 3 circles which have to mix together, and then one has to take a long view on this.
Divya, since you're the PE guy on the panel, very, very quick response on the fund of funds, right?
Yes.
That found passing mention in the budget.
Yes.
What about the operationalizing of it? A very quick response on that before I take closing comments from all 3 of you.
Yes. So quickly, the entire domestic fundraise industry that got started by the government's sort of program via SIDBI, SRI, and even NIIF, and government and I think massive credit should go to the government for that. Now, to that extent, they're already doing it, and if they're going to amplify this, it would help. At least someone like us would say that right now, a lot of the investment coming from some of the government funds is focused on primary investments into the company. They should continue doing that, but they should consider allowing secondaries also, because eventually those primary investments need exits. But at least the way, again, I see this is that the amount of capital that the government is willing to allocate towards this is helping actually multiply the capital that is being raised in the domestic industry.
Sure. Gentlemen, it's time now for closing comments. Vivek, I'm going to start with you. 2 quick questions. A, rank the budget on a scale of 1 to 10 in terms of how supportive do you think it is for the investment climate as well as Deal Street? And secondly, one key move or proposal in the budget or even direction which stood out for you?
So look, interim budget, so doesn't really deserve a number. But I think directionally very clear that this is a government which wants to assure a certain investment climate. For me, the fact that in all the uncertainty, they could still manage to clarify the position on infrastructure investments is something to say that this government welcomes and respects investments. Of course, a bunch of stuff to be done in the full budget, but to me that stands out. Fiscal deficit being retained at a reasonable level and the path to fiscal consolidation is the second big thing. So I know you asked for one, but these are the 2 things that I would say stand out for me in the budget. The government is making its position on various aspects super clear, and I think this will make the task of investors and corporates super easy from navigating the government standpoint.
Vivek, I'm going to push you on this. I need a score from you, 1 on 10. 1 to 10, what's your score?
Look, it's a great budget. I mean, I wasn't expecting too much more. Nothing really to sort of expect, but yes, stability, continuity of policy, simplification, great budget. Pick a score. I don't see any trouble. I don't see any trouble with the budget at all.
All right, Divya, 1 on 10, and one major aspect that stood out for you.
Yeah, no, if it was not obvious till now, I think it's actually a very good budget. And I also think that to some extent, budget is a forward-looking statement that the government has made. And one thing which really stood out for me was the fact that in a year where they could have been very populist, they actually have consolidated on the fiscal front. So that's a sign of a very confident government. It should help in our rating. It's a very long-term, big positive outcome. So I would rate it a 8 or a 9 if you want a number.
Right. All right. Shuva, go ahead. Same two questions to you.
No expert on budgets, but I think it would be very broadly at 8 level. It's a very good budget, given it's an interim budget.
And from a Deal Street perspective, something that stood out for you.
Yes, from a Deal Street, there was a hidden statement which stood out for me, was the deep tech focus on defense sector and the allocation they will do to defense.
Lovely. That's something we missed speaking about, but yes. That's an important aspect. Yeah.
I feel, if you want we are living in times where if you want a strong economy, you need a strong defense sector first.
All right.
You can't build an economy without the defense. So, so I feel personally that there's going to be a lot of action, a lot of investments and focus on this business. We're already seeing a lot of collaboration with American and French companies. That's going to play out fully. That also becomes the impetus for other ancillary technology-focused developments. So that's going to be a very interesting space.
Something tells me some big-ticket defense deals could be in the works during the course of the year. On that optimistic note, Shuva, Divya, as well as Vivek joining us from Noida. Thank you so much to all three of you gentlemen to dissect the impact of the interim budget on the investment climate in India and Deal Street. On that note, it's a wrap on this special budget show. This is Ashwin Mohan signing off. Stay tuned to Moneycontrol for more news, views and updates.